Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, August 14th, the year 2019. Let's talk trading. The Euro AUD, day 8. And of course, before we talk about anything when it comes to trading, we have to talk about our risk and money management first, because that's just how important it is. You fail to manage your risk, you're just flirting with disaster. It's just that simple. See, money and risk management is simple. Yes, I know. I do this every day. You guys might be tired of seeing this screen, but that's good because it means maybe you know it and hopefully you're using it. Maybe you're saying, come on, Rumpled One. Yeah, I know all about this. But there might be that one trader who's watching my video for the first time. And even if you've watched my video, I don't know, 1,000, 2,000 videos, however many I've done, you still need to see this each and every time. Okay, Euro AUD. Gaps have filled for the week. You see, we're still in that upper wick zone. But we did have a very nice move outside to the downside of that upper wick zone. And remember, we decided to be red rats on the Euro AUD because holding long more than a day, you're paying the highest swap rate possible. But holding short more than a day, you're getting the best swap rate possible. But if you're just day trading it, meaning you're not going to hold it past from one day to the next, you can see we had a really nice move here. We had a long bias, so taking the right there because of the pivot point above the buy zone. So taking that first trade, you can see there was profit to be made. It came down a little fake, not fake reversal, but it did reverse here. But you see somewhere along these lines, you probably took your profit. Maybe you stayed in. Otherwise, it would have swept you out right here with a loss. Gave the pros an opportunity to jump back in before taking out the pivot. But then again, if you just put the if you want for a one-to-one trade meeting, you say either it's going to hit the pivot or it'll go the same distance from the pivot to the open the other way. If you tried that, you were rewarded. But since the pivot changes distance on a daily basis, then your position size would have to change so you manage your risk. And looking at the daily, so far we have an inside bar. When was it? Was it let's see, was it a couple of days ago we almost had an inside bar here? It looks like we almost had an outside bar yesterday, but that was a very nice short there. I sure hope some of you traders took advantage, but you can see what happened to the range. We have a bunch over 100. Okay. As you can see, prices right around, looks like that previous day's midpoint. We'll probably see it here. Oh, yesterday I brought up the real-time price analyzers. So you can see the pivot points right here, and we're 40 pips above it at the moment. And I believe yesterday I ran out of video time. I have a 15-minute time limit. I don't want to take up too much time, otherwise I might be here for an hour rambling on about trading. But as you can see, we are right around that midpoint. We're 11 pips above it. And so we opened here, and you can see it just touched that bottom, giving you a wick zone entry, and then It kind of went to the moon there. So, oh, and there was a trader that was asking about the 3-level ZZ. And you know what? Okay, here we go. Well, let's move along now. One other chart first. The Einstein line, you can see here there was a entry short, an entry long, and then another went back and hit short. So you see winner, loser, winner. Okay, 3-level ZZ was asking, nobody's actively talking about this. Well, let me just give you a rundown on the 3-level ZZ. It's probably the most misunderstood and misused indicator there is. So many things people don't understand about it. So many things they just say about it that it's wrong. You see, most people think it's a reversal indicator, but the fact of the matter is it's a breakout indicator. It's showing when price breaks out. And then you can use it to look for reversals. But it actually indicates breakout. See, the ZZ stands for zigzag, and the 3-level means there are 3 different zigzag periods. Now, the base is 5 periods. That would be the 1 ball. Then the next base is 13, which would be the 2 ball. And the final one is 55, which would, no, I'm sorry, 34, which would be the 3 ball. And back in the day on M1, I wrote a, let's say, I think we were using a dynamic support resistance to simulate the ZZ, and we had up to a 6 ball looking for breakouts on the 1-minute chart and reversals. But as I mentioned earlier, we've moved away from it, but you can still use it as an indicator to say, you see a 2 ball here, then you want to go red at the line. But you see on the next candle. But then there was a 1 ball in the same candle, so you look to go green at the line, which would have been long at 65.10, and you see it hit 65.30. It would have paid you 20 pips, and that's not bad in an hour. So this, every now and then you get these extreme moves right here to here, and you see we're on H1, and then you're going to reverse off the last ball. But most people, then they say, oh, it repaints. But you see, what happens is it shows you what's going on in real time. So somewhere along here, the 2 ball appeared, and then it got pushed up to here, then it got pushed up to here. It repaints. Well, that's just the way the original coder wrote it. And then there was, can't remember who, but one of my trading buddies, he made it so it actually would paint these balls it would leave it behind. But you can just use the TRO dynamic support resistance indicator and use 1 at 5, which is the default. And then you can put another version at 13 and put another version at 34, and then, or instance of it, not version. And then it will leave the dots at each one of the levels. And some people even tried to say that my indicator repainted, which it doesn't repaint. You see, what this does is it updates in real time. That'd be like calling an indicator that shows you the daily high and the daily low, the current daily high or low, saying that indicator repaints. Well, it has to move if we get a new high or low. I mean, you won't know to the end of the day. So it doesn't repaint. It updates in real time. But most people don't understand that. So they want to vilify the 3-level ZZ. And unfortunately, I don't know if it's true or not, but years ago, I was told that the coder passed away, so I never got to contact them and find out exactly what they were thinking behind it, other than the fact that it just shows you three different zigzags. So I hope that answers the question of the trader who was looking for more current discussion on the three-level ZZ. Like I said, we've pretty much moved on from it, but it can still be used in conjunction with horizontal lines, of course, because that's what I base everything on now. Nothing, it's the triggers will be horizontal lines, and we use statistics, frequency distributions in particular, to determine when to enter, when to exit off of a horizontal line. Or I can just look at a blank chart, and this is a weekly, and you can see right here, we're in just barely in the wick zone here. We're still in this wick zone, and you can see what happened after this. Obviously, there are sellers here. We didn't quite make it here. Push down, now we're going back up. So looking for short opportunities right here, even though today, if you switch over here, you can see it moved up. But then again, this is the upper wick. You can see here it cut through these three wicks. Didn't quite get to the wick from the past 2 days, but showing right here. Let's start looking for some shorts. So you can use the rat zone to short. You could use the holo, highest open, lowest open on the hourly. Once again, you can, so long as you know when the day started, which was down here, you can see right here, the highest open trade. It gave you an opportunity. Looking here at the, once again, at the H1 wicks, you see higher, 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 but it came back down, cut through the wick here. The previous high on that candle moved down. You can see even on this candle, same thing. So looking at the previous high, the previous candle's high point, all you do is just put it right there, and that would be an area. In this case, 65.86 would have been a short, an area to short. And hey, if you're wrong, you've got your stop loss. You see, that's the beauty. If you're wrong, you got your stop loss, and you only lose the amount that you agree to lose if the price moves against you. And you see, once you understand that one little thing, stop loss, once you start using it, then you can trade and not fear. And that's the whole idea. When you put your trade on, you're comfortable, you're not hesitant. You know, hey, you know what? I believe that it's going to go short here. If it hits this point, I'm going to go short, and I'll put my stop loss up here, maybe higher than the highest point. So if it goes beyond that, I stop out. I'm using the right position size so I won't lose more than 0.5% or 1% of my account on this one particular trade. And let's just see what happens. I mean, that's the beauty of it. So, fellow traders, I hope I've answered the questions. If not, keep firing them at me. I'm happy to help. And those of you who send emails, you don't have to apologize for sending me an email. And I definitely try to answer all the emails that you send me. It's funny because so many people think that I'm not going to answer them, but I will. So just remember, when you're trading, it's not what you trade, it's how you trade it. So get out there and drain the banks.